Hello and welcome to the ByteTree Ask ByteTree, Ask Us Anything webinar, which takes place weekly. And this week I'm delighted, my name's Charlie Morris, by the way, and I've been at ByteTree for far too long. But this week I want to introduce Tom Salter, who's our analyst who's been with us for a year. He specializes in the sort of the deep dive into coins and tokens, and he's very, very knowledgeable in that area. So hopefully we're going to talk a little bit about his recent article in a moment, and then you can put questions in. So please load up your questions in YouTube, and then we'll be able to answer them shortly. But before we kick off, Tom, let's talk about my piece, which I wrote yesterday. Always, I don't really go much beyond Bitcoin, do I? That's your job to dive into the space into depth. But I suppose the highlight was really the flows. So, what do you think about the flows coming into Bitcoin?
Well, thanks for the lovely introduction. So I think flows have become more and more institutional. I think we could both agree that we like where the flows are going. As you said in your piece, over the last couple weeks, they've been stalling a bit, and perhaps that's because we've seen such great growth. But I also think that it is indicative of a bit of a stall, maybe a top. Some people are saying, and actually, I'm not too bothered about that, if you like. I think we've had such a good run, and I don't want to see too much of a correction, but I think it's on the horizon. What are your thoughts, Charlie?
Well, the long-term trend, as I kicked off with, remains very robust. I mean, there's nothing technically to worry yourself about Bitcoin, apart from the fact that it hasn't gone anywhere for the past 2.5 months, and we've had a couple of slides in recent weeks, but none of them are significant in the great scheme of things. And I sort of am more interested in connecting Bitcoin with the outside world, and my observation really is that it's behaving as some of the more speculative stocks are. I think the proxy for that is the ARK ETF, and that's been slipping a bit, and then the cheerleader stock would be Tesla. So you see a bit of a weakness in those sorts of areas. And then I think that you've seen on the other side, gold recover, unsurprising. The bond yields come down, which may soften the inflation narrative at some point. I tweeted today M2, the growth in M2, the money supply, which has been one of Michael Saylor's favorite charts. That's slowed a bit, still growing, just the growth of that is slowing. And so I think that some of the stories that got us all excited in Q4 are just run out of steam, really. And so we just need to find new narratives to latch onto. But then, bigger picture, things like the Grayscale Trust, big discount to NAV, that's not closing despite those announcements of $750 million buyback now. When you're $30 billion and $750 million really isn't that much to try and change the price. And as you said, we've got 3 weeks of outflow on the institutional side, but they're very small. They're small numbers. They feel more retail-y than institutional, even though they get labelled institutional.
Oh, totally. And just touching on the Grayscale discount point, and what does that mean for the wider space? We've talked with 3IQ, and they seem to do really well, Canadian funds especially. Why has Grayscale had this discount when everyone else has been doing great?
Well, it was the only way to buy Bitcoin for a long time for North Americans. So they could buy a Grayscale Trust, or they could buy, basically Americans could only buy the Grayscale Trust, but Europeans could buy the CoinShares XBT provider for a long time, until 21 Shares came in 3 years ago, I think now. But there's been lots of new funds recently, and I think the fastest grower we've seen in North America has been Purpose, which is an ETF. And the great thing about ETF is you can put money in and you can take money out at net asset value. So Bitcoin goes up 20%, goes down 20%. You get what the Bitcoin price is, more or less, but a little bit of spread, a little bit of fee, but no great shakes. I mean, in the case of the Grayscale one, being the only route to market for a sort of stock market investor as opposed to a crypto investor, it's just been this sort of bottleneck. And so there's been more demand than supply in recent years. And at times we've seen these massive premiums. And in the case of the Ethereum one, ETHE is the ticker, the premium was nearly 10 times the price at one point, which is extraordinary. And so, some people really have made no money despite the fact Ethereum's gone up 10 times. Not many people, I imagine, because I shouldn't think many people traded that day, but you'd be pretty disappointed if you correctly identified a 10 bagger and didn't make any money. So that one's gone from nearly 1,000% premium to a small discount. And basically, ETFs have come along in Canada, and obviously, as I said, lots in Europe, and they're the go-to. So, it would be right to go and buy one of those rather than a closed-ended fund. Now, closed-ended funds, just before I hand back to you, Tom, closed-ended funds are all well and good, because what should happen in theory is if there's a big discount, then the trust can sell their assets, which in the old days would be shares, but obviously we're talking about Bitcoins, and buy back shares and close the gap that way. But some of these structures may not be allowed to do that. I believe the Canadians one can, but the guaranteed trusts out of Delaware, less certain. I think, a trust is a trust and designed not to be unwound. So, I'm not a lawyer, so you are a lawyer actually, Tom, so perhaps you should know more about this than I do. But these the popularity of these vehicles are declining because better solutions have come along.
Yeah, I think that's an absolutely fantastic overview. And I think what we're talking about here is really institutions in the space and big money, if you like. And another point you touched on is actually the IDR ratio. And for everyone else, that's the institutional dominance ratio. And this ratio basically looks at transactional value over the blockchain and basically the largest transactions, and we consider those institutional transactions. So we've seen a small drop in April, and for me that's slightly worrying. I attribute quite a lot of value to the institutions in the space. I was just wondering, Charlie, what do you think about institutions in the space, and why are we seeing such a sharp drop?
Well, it's not a sharp drop. I think the big picture of institutional activity is growing, and we've seen some fascinating announcements. And someone's written in that US banks. This came out on the CoinDesk podcast with some technology from FIS and NYDIG, and the first time some customers of US banks will be able to buy, hold, and sell Bitcoin through their existing accounts. Why is the UK not doing more? Well, I won't answer for the UK because we are a regulated company, aren't we, Tom? So it wouldn't be very clever of us to say something against our fine regulator. But in the US, it's going to have a big impact. It is getting deep rooted in the system, and there's a big demand for alternative assets in an uncertain world, isn't it?
Oh, 100%. And just touching on the UK, I think, like I said, we won't say anything bad, but I think the UK sets a standard for a large amount of countries and jurisdictions. And I think that's why we're slightly behind, but we'll catch up, I'm sure of it. On your other point, Bitcoin around the world, maybe we should move on to a bit about my article at the end of last week, and actually looking at the sort of real world applications at the moment. And I think I've been focusing on that side more in crypto at the moment because, I think we might have gotten away with ourselves a bit with NFTs and everyone just seems to be making money everywhere. But realistically, I think having real world use cases is perfect. I think it's really valuable. What do you think, Charlie, on that?
Well, Tom, no one cares what I think. We care what you think, Tom. So NFTs, explain to the world what they are. So
an NFT, and as if people have been following it, it started off as sort of a unique asset, piece of art, a digital kitten maybe in 2017. But it's quickly become a unique asset. Basically anything is what skeptics say. So in my last article, we touched on one in particular, and that was someone's mortgage deed or an unpaid invoice. So these are unique assets or unique things, and they're essentially tokenized and put onto the blockchain. I think probably a more out there example is Beeple's artwork, sold for $69 million at Christie's. That's an NFT. And actually, what the article is looking at is trying to figure out how can we use NFTs in the real world and sort of what value can they bring. And I think one of the main sectors was factoring or unpaid invoices, and a company and blockchain called Centrifuge and Tinlake. And essentially those two companies are working together with Polkadot and Ethereum to bring unpaid invoices onto the blockchain and actually help fund small SMEs, small enterprise businesses.
I get excited by this sort of stuff because, you know, having followed the space for some years, it's always the application, you know, to give the credibility. So the likes of the big investment houses and the great regulators, for them to sort of have more confidence, they wanted to know why the world needs it, and that's always the more challenging bit. You know, there's so much development going on; it's impossible to count the number of projects. You only hear the ones that, you know, have risen to the surface and come into view. Now, there's a couple of questions coming in for you, Tom. What's the difference between Uniswap, Sushiswap, Pancakeswap? So many swaps. How to choose?
Fantastic question. So Uniswap and Sushiswap are both on the Ethereum network, and this is just a high level. Pancakeswap's on Binance Smart Chain, and I'd say Uniswap's my favorite. Sushiswap is a copy of Uniswap, pretty much sort of word for word, if you like, and Pancakeswap has quickly become sort of the growth aspect of Binance Smart Chain. And I'd say that if I don't know how much you've been looking at PancakeSwap, but the volumes seem to be astronomical, and there's been a few questions around that.
So can we just go back to the beginning and explain what they are?
Okay, so in effect they're called decentralized exchanges or DEXs, and they enable people to swap tokens for tokens. So if it was Uniswap or Sushiswap, it's a bit of a mouthful. Those are Ethereum-based tokens, and Binance Smart Chain, so PancakeSwap would be BEP20 tokens or Binance tokens.
And another question for you, Tom. Do you have any thoughts on the soon-to-be-released Dfinity ICP token?
I have to admit, I don't have much knowledge on Dfinity. I've heard that, well, the sentiment around the token is very good, but I'd have to look into the tokenomics to give a better opinion. What I would say is I'd say my view on tokens like these are stick with the best in the sector, and be careful with the smaller ones, because, you know, unless obviously you've spent your time researching, and this is not financial advice, by the way, but
what this is, Tom.
do be careful.
Yeah, no, but Tom's very thorough, and he looks at these things, and it's the credibility of the team, and it's the security and all these sorts of things, and the traction, and, you know, all those sort of investors in the stock markets over the years who've chosen the best company in each sector have always done really well over the long run. So I think that is a pretty sound piece of advice. Now, notwithstanding the fact that you pay for quality, so the best ones are always going to cost a bit more than the others. So you get what you pay for, I suppose, is the lesson there. Now, the next one is I'll take, actually. It's thoughts on the efficacy of technical analysis in general and how useful it is on crypto, basically. He says specifically Bitcoin, altcoin, and shitcoin. Well, I don't think it's that useful because the space is very volatile. Now, let me clarify that point. You've got price analysis. Technical analysis is the analysis of price. Now, the smart money would be trend followers, because that's very successful, and you can academically prove that it works, whether you use price or whether you use relative strength. I would think that relative strength is pretty powerful in crypto. For example, it wasn't too difficult to pick up Ethereum strength earlier this year relative to Bitcoin. So those sorts of trends are pretty calm, because you knock out market volatility, because both you know, all crypto assets are inherently correlated. So I think the relative strength aspect of it is strong. On the price side of it, I think it's very volatile for traditional trend following, because you get these large moves. But you can do some counter trend stuff. But again, it's not that reliable. I've always felt that on the technical side, and by the way, I'm quite embarrassed to admit that in 1999 I sat my technical analysis exams, Tom, and I got a distinction. That's quite bad, isn't it? And I sit on the investment committee for the UK Society of Technical Analysts. So there's my disclosure. So I do actually know what I'm talking about here, surprisingly. And I've always felt that the best thing is when the price of Bitcoin or something, the volatility is low, the trend following is at its best. And when the volatility is high, you should be thinking about mean reversion strategies, and trend following is the least reliable. So provided you understand that a good technical analyst knows how to change his spots or her spots, depending on the environment and what sort of things to use, then it can be very, very, very powerful. But the bottom line is stick to long-term trend following techniques. They can work from low vol to high vol, but just don't zoom in too much, because I think it's worthless. The shorter the time horizon, the less valuable the chart, basically, as a general rule. I'm sure the high-speed hedge funds will disagree with me on that, but to the human eye, I'll say that's probably right. What other cryptocurrencies, blockchains, do you think are the biggest threat to Ethereum?
Oh, it's a fantastic question, and actually really topical at the moment. Obviously, in the last couple of months, we've seen DeFi explode and Ethereum experience problems with gas issues. Just to take that back a bit, I guess, Ethereum's an application blockchain, and that means it utilizes smart contracts and actually allows protocols to build on top of it to basically transact value. You can lend and borrow, stake, etc. All words I'm sure you've heard before. So what you're talking about is Ethereum killers, if you like, and those are blockchains which threaten to take market cap from Ethereum. And in one of my most recent articles, I touched on one that has really experienced growth called Binance Smart Chain. And that was actually mentioned earlier with PancakeSwap. So Binance Smart Chain, I think, has capitalized perfectly on Ethereum's sort of mishaps. And I touch on a point in my article, and I say users just want a protocol that works. They don't want to spend £50 to do something that actually costs them next to nothing. And I think that's why you see, to answer your question directly, that's why you see blockchains like Polkadot, Binance Smart Chain. I think they're probably the main two. I would say focus on those ones first. But overall, Ethereum completely dominates the space. And I've been saying this to Charlie for a while now. It just does. And I think what we'll see in the future is not a threat, but a coexistence, similar to Bitcoin and gold, but everything coexisting alongside of each other and each specializing in a specific sector. Polkadot and Binance Smart Chain.
And the big thing here is scale, isn't it? Because what we talk about, these sort of platforms, is you have a token. On top of the token, you have many other tokens, and the ideal platform would a bit like the stock market, which can have 80,000 companies on it globally, different stock markets. But the idea, you want to have vast number of different tokens. You want to be able to transact them seamlessly and at low cost. I mean, that's the aim here, isn't it? And that's Bitcoin sort of has its monetary role, where it's the whole proof of work thing, which is sort of pretty unfriendly on the ESG side of things, which some people think is valuable. Some people think you store the energy, and that's a good thing. Other people disagree. And really on these platforms, does it really matter if you go to proof of stake, which is less energy intensive? I mean, you do become more centralized, and that's one of the the sort of push me pull you things that's going on in the space, isn't it? How much do we really care about decentralized versus efficiency?
Yeah, I think that's a perfect point. And actually, what you're sort of touching on is the scalability trilemma. And this is a triangle, and at the top it's how scalable your blockchain is, how decentralized it is, and essentially the throughput. And actually, with Ethereum, it's decentralized to an aspect. It's moving to proof of stake, so that's going to take a bit of a hit. Sorry, the third one's security. But I think scalability is a massive aspect, and also we should touch on the fact that Ethereum just does hold everything, and actually it's a lot more scalable than you think it is. And I think as ETH2 comes in and EIP 1559, which is the fee proposal, when they launch it, we'll see a much better side to Ethereum, if you like.
Yeah, and I think we were talking the other day about the assets on top of Ethereum relative to the value of Ethereum itself. And it's a sort of, it's a multiple, isn't it? It's, 10 or 50 or 100 times the value of the individual tokens, all of them put together, compared to Ethereum itself. And I thought that was quite an interesting metric to try and understand. And of course, the token could, Ethereum could represent real life. All of these platforms could represent real life assets. For example, property and so forth. And obviously gold is coming through. Gold's always the early experiment for these things, because it's just a simple asset to explain and test, unlike complex assets in the real world with annoying things like cash flows and rents and dividends and corporate actions. You don't want that sort of complexity on day one, do you? But anyway, so I think that's we've got one more question that's come through. Flippening. So what do you think is the probability or the chance of Ethereum overtaking Bitcoin?
I'm a maximalist, so 0. But I think to touch on my point earlier, I don't think they compete, and I don't think they try to compete. I think they both have set actions in the space. I see Bitcoin as a reserve asset on and off chain. And I see Ethereum as a great protocol to build and to help people with financial innovation. So a flippening, I'm not sure about that.
So the other way to pose that question is, does the space need a reserve asset?
Well, I think it does. Yeah, I think we can see it through Bitcoin on Ethereum, and I also think maybe it's not even that the space needs it. I think, as we could see from macro conditions, maybe parts of the world like Venezuela need it too.
It all comes down to the idea that there's multiple use for these things. And the Venezuela thing, how interesting is that? It's interesting for Venezuela, but as a global use case, I think it's wheeled out a bit too often. It's actually quite a small use case for something that's obviously much larger than that. But there again, it's a use case, and I think stores of value, provided the belief system is there, then they work, and that's absolutely fine. And the more every time we've gone through these cycles in Bitcoin, the more they get tested. And I don't think the next correction is going to be anything like as savage as the last ones, but I still think it's going to be nasty. And but it, provided you have that sort of shallower correction going forward, then all's well. Belief system go up.
Just to touch on that point, Charlie, what should an investor do to sort of maybe mitigate the hurt of the next correction? Should they pair Bitcoin with something, for example?
That's a leading question. What would you mean, like gold? Well, I'm a believer in that. The reason gold's broken out today, by the way. It's made a sort of 2-month high along with other precious metals. And, the sort of people in crypto would have been silver bugs a few years ago, if crypto didn't exist. It attracts the same sort of characters, nutters like you and I, Tom. And so silver would be much higher, in my opinion, right now, if crypto did not exist, given the macro backdrop to the world. But there is crypto, so that's taken the attention away from silver. Some people say it's taken the attention away from gold. I think less so. I mean, certainly the numbers are no big deal. Gold is much bigger. I reiterate that gold's created 10 trillion of value this century. Bitcoin's created 1 trillion of value. So there you have it. It takes a lot to turn us up. At the turn of the century, the value of all the gold in the world was not much more than $1 trillion. It was more, but not that much more. But to lift it to 10 trillion, 12 trillion, very hard. And so 10% move in the gold price is the entire Bitcoin, basically, network. So that's really how to think about these things. And Bitcoin will continue to grow, and it will sort of catch up. But the macro differences are very clear. I mean, it's very clear that Bitcoin's a risk-on asset. I just can't imagine it being the go-to in a 2008 style crisis. I can't imagine everyone saying the world's about to collapse by Bitcoin. I can see it in a monetary debasement, but I just can't see it in a financial panic. So yes, I think that finding Bitcoin's role in portfolios and the space is definitely something that people should be thinking about. And responsible weightings. You don't need to have all your money in Bitcoin. Obviously, if you're 18, then you should. But if you've actually saved something, you want to protect it, then you probably shouldn't. So that's pretty obvious. Now, I think we've got a final question before we round up and leave this on the internet for the next 1,000 years. Do you see a future where all stocks are tokenized and trade in the same way as crypto? So basically, the question says, real world assets, will they use the payment rails of crypto? My answer would be, I think they will. What do you think?
Yeah, I think spot on. I think they will. And I think people are yet to sort of harness what blockchain has to offer. And I think another angle to James's question is talking about synthetic stocks. And these are assets or synthetic assets, i.e. they track the price of a real world asset or stock or commodity, etc. So one of the largest platforms is Synthetics. And what they do is they allow people to tokenize Apple stock, whatever, Netflix, maybe Tesla, if you're feeling a bit dangerous. And what these stocks have liquidity across the whole space, and they can be transferred as tokens. Sure, at the moment the underlying asset isn't there, but they're collateralized with real crypto. So I think that certainly has a future, and I think James has touched on a fantastic sector that has a lot of growth potential.
And it's not stupid, because the entire system of swaps in the financial system is when you swap the outcome of one asset for another. Quite literally, that's what you're referring to here. Provided there's collateral in the middle and that's marked every day, then it's fine. So you can have a pile of bitcoins over here, and you can have an outcome of Japanese equities over here or whatever, and you can just say, well, let's just make turn one into the other, provided which is just a financial contract, a bet effectively, and provided there's collateral in the system. So if it all goes wrong, then you can just claim that collateral. Then it works, and the proof is in the pudding, because it does work in the financial system in massive numbers every single day. So yeah, absolutely. But the payment rails of crypto are spectacular. And the thing I just want to say, we've talked about gold tokens, and that's an easy one. The other thing is the central bank digital currencies. So places like Canada and Britain and Europe and so forth, and China have expressed interest in that. Where the US have sort of taken a different view, and they said, well, they already exist. Stable coins already exist. Some of them are regulated, and that's them. Go use them. And why wouldn't you when you can settle cash T plus now pretty efficiently? That's pretty amazing. Regardless of your view on cash, of course, cash is not going to appreciate 1,000 times like a token will. But that's not the point of it. But it's certainly you can transact it very, very quickly and very, very efficiently in large size. So it's going to grow, isn't it? And this space, there's only one thing I'm certain of in this space. There's just more of it each year. Less certain about what the prices will be, but there'll be more of it.
Yeah, I totally agree. I think part of that's actually the sort of regulation side of the US. They've spent a lot of effort on USD coin or USDC, and actually that's a stable coin backed one-to-one with the US dollar. And actually that's one of the most regulated stable coins out there. So I think they're sort of taking that stance. We've spent so much effort with this. Please, can you just use this one first?
Well, I mean, it ought to be the solution. Private sector solutions to real world problems are, generally speaking, more successful than government solutions. That said, I don't think I want the police or the military to be privatized too much. That scares me a bit. But everything else, I'm always voting for the private sector. Well, with that, Tom, any final comments you'd like to make?
Well, I think we've covered everything, really.
Everything. There's nothing else in crypto.
Well, okay. There's one more thing. So we've seen inflation expectations hit a decade high, according to Bloomberg. And you touched on it earlier. Risk-off environment is not good for Bitcoin, and as you said, paired with gold makes it slightly better. But do you think the expectations are as bad as they seem? Some people don't, but from my point of view, what's that worth?
Well, inflation is a complex subject, but you can boil it down into the sort of the price of stuff, which is linked to the economy, and the price. So we've obviously got a recovery, so prices go up. There's bottlenecks and all sorts of things. I mean, the Suez Canal thing with that poor chap with the digger was a good example. And then there's lumber. There's no shortage of trees in the world, but there's a shortage of processed wood, which is called lumber, and the price has gone up a lot. So that stuff is cyclical. Don't take that stuff too seriously. It will pass. But the monetary side of inflation, which is the confidence in the value of money, is another different thing. And that's really where the conversation needs to go. I think the cyclical element of inflation will cool later this year once people get bored of the recovery and discover the new normal. But the monetary side of it, it really depends on our politicians and how much they take the piss on this, on the financial system. And right now, no one votes for a grown-up these days. No one really cares about austerity and public finances and that sort of thing. So that's where you have to worry. And you don't really, it's very hard to say what will happen and how it will happen. You just know that something very nasty will happen at some time. And hence, crypto is seen as something different, and alternative. People always rush to alternatives during times of uncertainty. And I think that's why the space is so well placed, and it's really growing. It's the real deal, isn't it? But inflation is always going to be a subject that we're going to be coming back to time and again, not just in this space, but elsewhere too. And so far, all the data that I've studied suggests that this space loves inflation. It thrives on it. Risk on inflation loves it. You'll never be short during that time. With that, we'll say thank you very much, and we'll look forward to seeing you next week. Thanks, Tom.
Thanks.